Hi, and welcome back to my channel. I'm going to try to mix things up a little bit. My last few videos have done pretty well, and I'm really excited about that. As you can see, not a great day. Actually, the market as a whole struggled, but what we're here to talk about is Vivint Solar and why I think they've actually peaked. That's an interesting conversation because if we go ahead and look, every single one of my stocks was down today, including Bitcoin, except Vivint Solar. That being said, I still think there's a lot of reasons to believe that they've peaked. But we'll go ahead and get into this quickly so that we can talk about a lot of different things. So like I said, on the day, only up $1. On the week, down $60. On the month, up $160 or 4.5%. 3 months, I'm up almost 12%, which is terrific. In the last year, up 8.2%. And then if we zoom out to all time, we can see I'm up 8.65%. I am down about $100 on the week. A lot of that has to do with Vivint Solar, and a lot of that has to do with coronavirus, which we'll also talk about in this video. Like I always say, if you like this video, go ahead and subscribe to the channel, like the video itself, and share with a friend. Let me know what you want to see, and I'll make it happen. But we'll go ahead and get into Vivint Solar right now. So, 1173, that's what it finished today at. As we can see, I am up $12 on the day with Vivint Solar and $207 all time. Still wonderful, almost a 70% return. I can't complain. The big thing is if we zoom out to the last week, we can see that it peaked here on February 20th at $12.89. That is not an all-time high, but in the last 4 years, it hasn't reached that peak. If we go ahead and zoom out to the last 5 years, it was 2015 even since the last time they were up that high. I don't see them reaching that, and we'll go ahead and talk about why. It still has 100% buy rating on Robinhood. I think a lot of that has to do with that just not being updated. I've talked about their earnings quite a bit. As we can see, they are trending upwards, but as of their last earnings call, they still are losing money, and coming up in about 2 weeks, they've got another earnings call. I would say it's pivotal, but clearly this is going to be a huge one for them and a deciding factor in whether or not they continue to increase. But here, CNN Business has a chart of where they project the value of Vivint Solar to be. So here we have their price forecasts. They have it at 1176, like we said. They have a low target price here of 9, a high of 21. It's a huge range, so there's really a lot of question marks here. The median is 1150. So what does this mean? We're over that target price, meaning that these experts don't see a ton of growth. Clearly with the high being $21, somebody has a very different analysis of what's going on, but that just depends on what people see, what they think. The big thing here is their earnings per share. So as we can see, their earnings have, like I said, been trending upwards. That being said, the estimates that these so-called experts have been all over the place. So we just don't totally know. Earnings per share is negative here, like I said, minus 33 cents. Sales is 88 million. Their sales is increasing. They do have higher revenue. The problem for them has been that debt that I've talked about in the past. There are a lot of other reasons to look at this. So something interesting that happened last week is in this other article I have pulled up. They say California eases up on sweeping solar mandate for new homes. Now let me know. I would love to make a video dedicated just to this because I think it's a really interesting topic and an integral part of both stocks and just general knowledge. I think people have a lot of misconceptions about solar, but we'll go ahead and get into this. They say California is backing away from its once sweeping mandate requiring solar panels on virtually every new home. They said the California Energy Commission voted unanimously in favor of a measure proposed by the Sacramento Municipal Utility District to allow homes to get power from solar farms instead of rooftop panels. For those who are not aware, California had a mandate that was supposed to go into effect this year. It said there were some provisions that basically said some homes were exempt from it, but the main idea was that all homes had to have solar panels on the roof as a form of clean energy. Sounds great, but then when you take a deep dive into the statistics, there's a lot of reasons that this is bad and why it's really not a great idea. So he said California's mandate was unprecedented when enacted in 2018 as part of former Governor Jerry Brown's effort to slash carbon emissions. Required most new homes starting in 2020 to include solar arrays. Builders and others have warned that it could drive up the cost of buying a new home by almost $10,000. This is extremely important. And like I said, there is a lot out there and I'd love to make a video based on this. But really the idea is that California has a home shortage right now. They're struggling to produce new homes and we're seeing prices skyrocket in places like LA and San Francisco. That shortage has caused, in some cases, homelessness crises. They've got a lot of problems. And all they're doing here is increasing the prices of homes. Certainly I'm conflicted because I own solar stocks, but at the same time I don't think this is a good move, and I think that them backing off is a good idea. However, it's hurting solar stocks. So this is another reason. So they said on Thursday when this happened, Vivint fell 6.7%. So as we can see, last Wednesday it peaked at like $12.85, and it was all the way down to $12. Sunrun slipped 4.5% to $22.34. The big thing that they're talking about here is that allows people to forego rooftop panels, and they have these community solar farms instead. So they still want to do solar, they still want to do clean energy, but of course solar is not the best form of clean energy. If you know what it is, leave it in the comments. And like I said, I'm really excited to talk about what a better form of energy is in the long run, and certainly the stocks associated with that. The commissioner said, we want the marketplace to figure out how this gets done. And he said, we wanted to see innovations. Well, there's no innovation going on if you're forcing everyone to do the same thing. So definitely something to take a look at, and of course I will be on top of that in the coming weeks. Now looking at the rest of my portfolio, like I said, because of the coronavirus scares in South Korea, Italy, and China, everything got hit hard today. But some things got hit harder than others, so we'll go ahead and talk about it. Microsoft is one I always like to touch in on. Of course, they've gotten hammered in the past couple weeks, so I'm still up almost 40% on this, but if we look at the past month, it peaked here February 10th at $188. It's down 16, not a huge deal, but definitely something to take a look at. Over the past 5 years, still insane performance. A lot of good reasons to believe in Microsoft, as I talked about in my last video. One of President Trump's MAGA stocks. Cloud services are doing great for them, so I'm not concerned. Now, if we look at some of these other ones, I am more concerned. Pfizer is, it's a pharmaceutical company, which means there's more risk inherently. That being said, I think I'm going to hold on to these shares for now. Let me know if you think I should buy more, if I should sell them, if there's another pharmaceutical stock that you think might suit me better. But as we can see, I'm down $23 on this all time. So per share, I'm down roughly $6. Not good to see. On the last week down, when we zoom out to the 3 months, we can see that they were up here January, trading for almost $41, and they've seen a nosedive. Not particularly sure why this is. The problem with pharmaceutical companies is that they're absolutely dependent on a single drug. They are absolutely volatile, and there's a lot of things that can go on. So I will continue to watch that. Agilent has been hit decently hard. As we can see, I still am up $17 on this, or 12%. But if we look in the past month, they are down almost 8%, or $6 a share. Past 3 months, when we zoom out, we can see upward trend followed by this downward trend. Over the last year, only up 2%. Over the past 5 years, up 92%. So definitely a good stock for me. And we'll continue to go down. This last week, I did buy Vivint. Of course, this is my REIT, and I forgot to take a screenshot of this. I'm trying to take screenshots of those more often to give you a better idea of the purchases themselves. So I had 12 shares, purchased another 3 at just over $10. So as we can see, average cost $9.84, 15 shares. So total cost is $147, total equity is $150. So a tiny return on here does pay a constant dividend of $0.1375 per share, or 13.75 cents quarterly. Now, this constant dividend means that as the company does better, as the price of the stock goes up, that dividend yield is going to go down, but the dividend is constant, meaning that there's no chance of it dropping really unless things get drastically bad. Over the past year, up 24%, which is great to see. Over the past 5 years, only up 17%. I have talked about it in some of my previous videos, the struggles that they've had, some accounting errors, and that's why they reorganized and didn't go public again until 2015. But definitely a stock, or really a REIT, that I like. Now, the last one that we'll talk about today in terms of stocks is going to be Penn. Of course, I had my Barstool video where I talked about how confident I was in Penn. I thought that they had a lot of good things going for them. Certainly, I still do believe they have a lot of good things going for them, but they have struggled. So down $2.50 here since I purchased a couple weeks ago. If you look at the last week, down 3%. Over the last month, still up 40%. Certainly their purchase of Barstool Sports has everything to do with that. When I bought, I think they were a little bit overbought. The price was a little bit inflated. But that being said, I'm not super concerned about it, and I think this is a good play in the long run. Only complaint here is that there is no dividend, which I always like to see. Over the last year, up 41%, and over the past 5 years, it has over doubled, 111% growth. The earnings here is going to be the most important, and we can see consistently high earnings. I'm not sure what happened in Q4 of 2018, But that being said, their earnings have been pretty consistent. Now, I do have an article pulled up from Warren Buffett talking about why the coronavirus isn't something to be horribly concerned about, which is definitely interesting considering this amount of money lost today. So here, Warren Buffett says, don't buy or sell on the headlines as coronavirus sends stocks plunging. So here they say, coronavirus fears have taken over and panic has set in. Global stocks are plunging on Monday after the number of coronavirus cases outside of China surged, particularly in Italy, South Korea, and Iran. So I said Dow Jones was down 3.5%, 880 points in early trading. European stocks plummeted. Italy took the hardest hit today, down almost 5.5%. We do know that that's because of the cases directly in Italy. Clearly, that's going to hurt their stock market much more than us, and it's going to hurt their economy much more than us. But here, Buffett said, the real question is, has the 10 or 20-year outlook for American businesses changed in the last 24 or 48 hours? Clearly, we know they haven't. He said, you'll notice many of the businesses we partially own, American Express, Coca-Cola, those are businesses, and you don't buy or sell your business based on today's headlines. It gives you a chance to buy something you like, and you can buy it even cheaper, then it's your good luck. So, of course, Berkshire Hathaway, the company that he's founded, down 3% today. But it is an interesting point. This is a short-term problem. Even with something like Ebola that killed more people and was a little bit scarier, we do know that stocks rebounded. The market's rebounded. It's temporary. Like he said, this doesn't change the 10 or 20-year outlook of the stock market. I'm not a day trader. I'm not a swing trader. I like to buy stocks. I like to invest and save. So like he said, it's really an opportunity to buy stocks cheaper, which is wonderful. If you think about it, it is a great opportunity, and I would definitely advise people to certainly look at stocks and just see what they want to do, even if they don't buy. So here they said, coronavirus outside of China sparked a global sell-off. Dow fell 3%, S&P 500 down 3%, NASDAQ down 3.5%, and of course Italy down the most. Really, the big takeaway from all of this is that it's not the end of the world. It's just one bad day in the stock market, and I think that we have to be more positive about these things and understand the outlook of the market is still going well. So thank you for watching this video, and like I said, I think by the end of this week I'll have a video out about that solar law and why I think that could be detrimental to California. But again, thank you for watching, and I'll be back at the end of the week.